Hey everybody, this is Mike Hoffman and Eric Feldman, Longhorn Investments. Eric and I are kind of just doing some videos talking about real estate in the time of the coronavirus. Um, Eric,
Yes, sir.
I think we left off last time. We were talking about pricing and appraisals, and we left something out that we wanted to discuss. So let's touch on that real quick before we get into today's topic, which is going to be lenders and how we're looking at the world. So this one might be a little bit longer than the other ones, just FYI, since it's our, it is our forte. So real quick on appraisals. One of the questions I know folks have been asking, borrowers have been asking us is, hey, the appraisals that we're getting, how come they don't reflect what's happened in the world in the last 3 to 4 weeks? And what's our response to that, Eric?
Yeah, and I visited with a few of these guys because I want to see how they're looking at things. And the reason it doesn't reflect is they can't create something based on a future event, right? So they're looking at, through their licensing and their requirements and the Fannie Mae guidelines, they're looking at comps. That's their main thing they look at, right? And our kind of deals are looking at work done as well. So they look at the scope of work, but they're looking at past comps, something done a month ago, 3 months ago, 6 months ago, depending on the area. And so, most of them, didn't seem that rattled by the events and that they said, these kind of things happen and this is our process. And that's why it's supposed to be as objective as possible, right?
So these kind of things happens though. Maybe not a virus that shuts down the whole economy.
Yeah. So, and when I talked to them, I even thought, okay, guys, are you adjusting these 10%, 20%? How are you looking at these, right? Just kind of thinking they would say, yeah, of course, the world's collapsing. But, they just said, when this happened in the financial crisis, which was a once in a generation thing in 2008, 2009, they couldn't look into the future and try to use a crystal ball and figure out, what, I'm going to think this is going to go down about 20%. And so that's how I'm going to, make the value, consider that. So what they do is they're looking at, past comps and work done, and they look within 1 mile, not over major thoroughfares, all the different guidelines they follow to come up with this ARV appraisal, or if it's an as-is appraisal, whatever it is.
So what you're telling our viewers, our borrowers, is that what's going on in the world today is really not going to affect your comp. It's not going to affect the appraisal of the property until some of these properties start getting sold and they have some new comps that we think the prices will be a little bit lower. Although there's reasons right now why prices might not be that much lower. I mean, interest rates, all-time lows. So people that can qualify for loans, it's become a buyer's market at this point, right? Good pricing and cheap money.
Yeah, good pricing. And another thing is inventory is a little less, right? Because some people aren't listing their properties right now. So, when inventory is less, that means usually that drives up the whole supply-demand thing. So, yeah, I mean, it may not change. We'll have to see how bad things get out there, right? To see if things, within a month or 2 months start changing value-wise.
Right. And so, and so that this dovetails really nicely into our topic that we wanted to talk about today on this video, was that even though the comps might be the same and the appraisals might be coming back the same as the last 30, 60, 90 days, lenders are not behaving the same right now, right?
Not at all. And that's if they're behaving. When you say behaving, some aren't even lending right now. A lot of our competitors have seemed to kind of take a pause or are sitting on the sidelines because they don't know how this is all going to shake out. And I think they're probably concerned about valuations, right? Maybe their investors are getting a little skittish, probably a number of reasons. And Mike, you can elaborate on that, I'm sure, too.
Well, listen, in our business, there's different types of lenders, right? So lots of folks say they're lenders, and they are, but maybe some of them are really brokers, and they're just facilitating the transaction, right? So they don't have any actual money. They're dependent on a third party to come in and fund the transaction. Then there's folks that sell their notes. They create the note, maybe they hold on to it for 30 days, or it gets table funded, but they sell their note, and they are wholly dependent on somebody buying their note. And so no one's willing to buy their note, they're not doing any transactions, right? Then there's folks that have their own money. And then there's folks like us where we have a fund. And so we've raised capital from, a couple hundred different people. and we have our own fund and we control it, and we're not wholly reliant on third parties. Now, we also have lines of credit with banks, and so some folks also have lines of credit with banks. And so when we say some lenders aren't lending, we have found that the folks that are wholly reliant on third parties to either buy their notes or fund their transactions at the table, or brokers, they are struggling right now for folks to find people to buy their loans. Because it appeared to me that some of the folks that do that in our space put a pause on things. And that's what we've been finding, right? Our borrowers or new borrowers have been contacting us, letting us know that, correct?
Yes, exactly. And unfortunately for them, some of them went to the closing table, and then, right before it went time to close the deal, the lender backed out, right? For the number of reasons you talked about. And so they may have lost a deal, or some of them still had time, so they could come to us, and we're able to jump in there and help, which was nice.
Right. And so, and listen, not necessarily fault of the lenders, right? They might not have found out till just recently that their funding sources weren't going to fund the transaction. So, one of the things that we would really caution to any of our listeners right now or borrowers is that really talk to your lender before you're getting ready to close transaction. Make sure they can fund your transaction. And because you talked to them 2 or 3 weeks ago and everything seemed good, I put a phone call in or shoot an email to them. Hey, we're still good to go on this transaction. Make sure, it's a moment by moment, day by day thing. Now, Eric, let's talk real quick about lenders who are still lending. I know for us, one of the things that we've done is we've lowered our advance rate, right? So traditionally, we were 70% of the after repair value, or even up to 75% if it was going to be a refinance. But right now, we've dropped our advance rate to 65% after repair value. Shed some lights for some folks why we would do that right now.
Yeah, and this it does dovetail with the appraisal thing, right? Because appraisers can't change a value based on, looking in the present or the future, right? But we can do something like that with our advance rate. And so we think that the valuations on properties are different, overnight. We do think things have dropped probably 5 or 10%, right? And so we want to make sure that when somebody does a deal, they hopefully get the best deal for them, right? We're on the same side as our borrowers. We want them to get a great deal. So we do think that should be reflected in the price they buy the property. And then also, we want to make sure people have enough cash, and that they understand, that maybe they have a little bit more skin in the game, or they're putting more money into a property because things may take longer. And so we're reflecting that with our advance rate of 65%. And we're really looking out for our borrowers when that, by doing that, we think. And, utilizing that as a tool, the COVID addendum that people have right now, we think they can go and negotiate a better deal for themselves ultimately.
Right. And look, we're trying to protect the borrowers. We're trying to protect our investors. We think lowering the advance rate was the prudent thing to do right now. But that's all we did, right? We did not raise the interest rate. We did not raise the origination points. But I would suspect over the next weeks and months that as lenders come back into this, especially some of the folks that jumped out, when they jump back in, they're going to raise their rates. They're going to raise their origination points. They're going to have some more closing costs and fees associated with it. I think they're going to take the view that there's greater risk now, and so they want to get rewarded for that risk.
Yes, and so we've been on some conference calls with some of the long-term lenders and the refi people that take our borrowers out of our loans, which will be a topic for a different day. We could talk about that one too. But they already are, their rates and their terms and everything are already reflected with some change in there. And they're building in the risk. They're charging more. They're making people bring more interest upfront, prepaid interest, things like that to mitigate the risk. And so that's already begun to happen. And that's if they're actually lending, because there's still a lot that aren't even lending at all. So I imagine Mike is right on point that that'll come out in the next few months when products start, coming back to the table.
Right. And so listen, the point of these discussions that Eric and I are having is we really want our borrowers to be as educated as possible, right? And I think things have happened and moved so quickly in the economy, in the real estate space, that we just want to give you as much information as possible so you're prepared and moving forward. If you want to buy properties, if you want to get into the real estate investment, if you want to add that as part of your portfolio, then we want you to be armed with as much information as possible. So we're going to keep doing these little video clips, and if people want us to talk about certain topics, you can email us at info@longhorninvestments.com. You can go to our website, longhorninvestments.com, see what information we have out there, and if there's something that's not there, or you want us to talk about more things, send us an email or call us, and we'd be happy to talk about anything what you'd like. Eric, is anything else you'd like to add? Did we forget anything about our discussion on lenders?
I think we got it for the most part. Just I caution borrowers right now, or potential investors, that make sure, if people are promising the moon right now as far as lenders go, really make sure to look at that and vet them out. And now's not the time to kind of try to get if something sounds incredibly too good to be true, I would really look into that and talk to the lender about, are you a direct lender? What's your source of capital? Do you see anything changing from your end as far as not being able to fund deals? Right now is not the time to save half a point or something like that. You just want to make sure your lender is strong and they'll be there for you to close a deal.
And real quick, let me ask you one more thing. And I don't know if you've seen this or not, but I think as a borrower, maybe kind of touching on what you said, you might want to be aware of it. Typically in our space, folks don't ask for upfront cash from the borrower, right, to look at a deal. I know all we ask is that, they pay the appraiser direct if they're going to get the appraisal. Have you heard or seen anybody requesting borrowers to put money up front before they even underwrite the transaction?
Absolutely. There's one that comes to mind, because I have people call in and say, hey, do you charge $3,000 too, just to kind of look at the deal? And that's not what we do. We're going to evaluate a deal, and we want to tell you, and I think a lot of lenders too will tell you, hey, let's look at the numbers. Maybe some have an application fee or something just to start. But at least in speaking for us, we look at the deal, we analyze it with you. We're trying to be on the same side of the page. And so I'm happy to do those things. There are no upfront costs with Longhorn. And so just make sure with the lender you're dealing with, that's the case.
Yeah. All right. Good info. Okay, folks, that's going to do it for this one. Stay tuned next time for our next topic, or if you've got ideas, but, we thought we'd maybe talk a little bit about general contractors in the time of the coronavirus. Anyway, everyone, stay safe out there.
Thank you.